And good afternoon. This is the Elliott Wave daily update for the S&P 500, being recorded on Tuesday, September the 2nd at 2:15 p.m. Pacific Daylight Time. I got to tell you, it was an interesting day, nonetheless. Um, we did get a continuation to the downside, pretty much as expected. It held that support, which was down below. We actually had some at 63.73, and it got just below that. And then we had additional off of this low, and that would have been at 63.62. And actually, let me just double check. Yeah, 63, actually 63.63, we'll call it. And it didn't get close. Kind of close. Got down to 72, so it got within nine. So it didn't break below that wave two, which was a good thing. So no need to switch this over and make this A and that B, and then we're coming down in a C wave, which was one of the choices this morning. And it did look for a minute that that's exactly what it was going to do, but we seemed to stop. We rallied back. The market did not go back down and retest that low as it did in the NASDAQ. And so in the NASDAQ, it rallied up and came all the way back down. It did not get there here in the S&P. In fact, the S&P is built on that rally. And as you can tell, I'm probably going to label this one, two, and we're set in a third. Now, I believe we're in a C wave, but we're in a C wave of minuet wave three. So there's the A wave, here's the B wave. We're looking for a C wave. Definitively, we're looking for it to get above 65, whatever that high is, 65.23. We're looking for that. Our 100% where wave C would be equal to wave A comes in at 65.32, and that is the most common. So we're at least looking for that. But if we get a solid kind of a blow off to put in this wave three, which I think will hold off. So I think we might get up to here a little bit more for wave three. And then we come down in a four, we go back up in a five, and that's the one that I think we could actually get up into that 6,600 area. I know I have higher levels, and they're going to remain for right now, but it starts to get questionable as to how far all of this is going to go. We still are now in the month of September. So initially, a lot of the algorithms were showing that we probably should have a continued downturn. Really, that might take us all the way through September the 11th. That was when the expected low, according to some of the algorithms, that you could expect a low at that period. But at the same time, we were to get a spike in volatility, both the September contract and the October contract. Well, we did. And we got up to levels this morning uh, or during today's session that reached that spike level of what the expectations were within those 2 months in the volatility future. So that kind of coincides with the market, putting a stellar rally in, and really in the last hour and then the additional hour when we got that news on Google. So their antitrust ruling was in their favor. And so they're not having to sell Chrome. They're not having to pay some fines. It was ruled in their favor. And that actually is actually pretty good for the tech sector. So because there's some common ground between Google and Apple about working with Siri and a bunch of other stuff, Apple was up. Actually, it was up above 238, so that puts it at $9. Now it's trading just below 38. Actually, I think I saw it at 39. And Google all-time new highs. And so Google's up about 17 right now. And so I think that that rally is going to continue. And because that's kind of been holding it down for a while. So now that that weight has been lifted, we're seeing the result. So let's see what happens overnight on that. But that could be the catalyst that's going to get us up to top out on this third wave, pull back down in a fourth. Now, we still have, we're looking out a little bit, in September, we have, first of all, September the 17th. Not only is that FOMC day, but it also is the an expiration, a volatility expiration. So here's where it kind of doubles up because this is September. So the end of September is the end of the quarter, the end of the third quarter already. And so time is flying by. So what we have is just the regular September expiration on the 19th. I know it's September the 2nd, and we're already talking, 3 weeks away, but I'm going to tell you it's going to go fast. Now, here's my thought that, the market's still kind of thinking that we're going to get that rate cut, and that's what they're pricing in, even though that yields in the bonds today are kind of pushing back up towards 5%. So it's this hot spot now. What are these lower rates really going to do? And so I begin to side with there's a analyst, just a commentator who basically said that once we do get that, if we do get the rate cut, if it's a quarter of a point, that he believes that any ensuing rally off of that, you just put the tombstone right on the top of wherever it finishes. And so what he means by that is like, that's it. That'll be the high. And the market just starts to come apart from that level. And I actually, we're picking up something else that another analyst or just a commentator had mentioned, and I like this one even better. Tombstones I like very much, but this one is and those of us that are old enough to remember the Roadrunner cartoons and Wile E. Coyote. So if you remember, Wile E. Coyote would be chasing and running around, and he'd go flying right off of a cliff, right? He's running after the Roadrunner and suddenly stops, looks up, looks down, and realizes that there's nothing supporting him and just drops. And so I think that what the market could work its way into is a Wile E. Coyote moment where the market just gets up so high and then suddenly everybody's looking around going like, well, what's coming up behind to support this? And there'll be nothing but air. So I think that we could drop very quickly out of that one too. So now, whether that is going to, I think we got to get up and finish this third wave of this triangle pattern, right? So this minuet wave three. Now, mind you, let me just take it back out to, I can go to the 30 days and that'll give me enough. So here we are counting it, right? Here's wave four. That's minute wave four, so we're minute wave five. There's minuet one, minuet two. We're working on minuet three. We get up, we come back down in the small four. We go back up in that fifth wave to finish the whole thing. And that could coincide mid-September. If we consider how quickly this one all unfolded, the B wave, we get that C wave done. And if we get two more solid days of rally, we're up here. We'll be done. We'll get it up there and we'll be able to pull back and do it one more time. So yes, I do think that there's a chance that we could finish up. And believe me, when we get up there, folks, that minute fifth wave, the minor fifth wave, the intermediate fifth wave, the primary fifth wave, the cycle wave three. And I think I talked about this in the weekly update and how the potential that we could do a major tumble off of that high, whatever high we get up to, whether it's 6,600, 6,631, we've got other levels above there. And it could be, but I just, to tell you the truth, it's going to get interesting to find out how high we could go and still get a rate cut that could give us a spike, a finishing spike. So yet to come, but I'm just thinking like in terms of when this all could complete, that we then move to the end of September into October. And so both of us be considered down months. And so we start to come down in that cycle fourth wave. In the A wave, we put in an A wave low and maybe October, November, and then December we start to thrust higher in a B wave rally to finish out the year. So there's still all those possibilities where we have the AI running, and it continues to suggest there's going to be a surge. There'll be a surge within the fourth quarter. And I think that could come late in the fourth quarter and actually be December and maybe into the first quarter of 2026. Yet to be determined, and that's just kind of forecasting out on something that I really don't, other than what the AI is telling me. And the wave patterns, I've got, it could get there, but I think we're going to get there quicker unless the fifth wave really extends. But it shouldn't extend beyond an ABC. So, so anyway, so here in this C wave, yep, I'm looking for five. C waves are always five, so I'm going to be looking for five as we go up. And I think that what we got going on again is 1, 2. And we're in this, look at that beautiful third, just like launches and goes to town. So I think it's just going to continue because they're continuing to buy Google. So as long as they're going to continue to keep pushing, and then they're going to go into all the auxiliaries. We've got Apple that'll start to come up. We'll start to see some others that will pick it up and run with it as well. So a lot to be said about how high we can get on that news, plus anything else that's going to be coming out. So it's all looking good. And here we have our moving averages on the 15-minute changing. Let me go out to that daily. We'll look at the moving averages on the daily. Unfazed, by the way, but here we are. We got them closing above the 20. We came down, we broke that 20, and we headed right on through it. And now we've come back above, and we're finishing the day back above that 20. That's positive, actually. And so the 8 is starting to flatten out, but I think it won't take much before we can get above there. Now, these, and then we have the 50 down below, which would have caught any additional flat coming off the market at 63.31. And then we have the 200 all the way down there at 60.19. Now, there are still calls out there, and they're not unreasonable, that the market can still rally up, but get caught in a down swoop and end up down around 61.35. Although, actually, excuse me, 61.55. And then we have 59.50 down here in the bottom. And those coincide with this fourth wave. So interestingly enough, I don't know how much weight I give that, because this would have to be A, B, C, or A. This would be the A wave, A, B, C, the B wave, and then maybe, I don't know, A, B, and we got a C wave moving up. It can, but it should be, yeah, it's just not fitting anymore. That I think the 4 has to be there. And so I don't think these come into play just now, and they will have different levels, actually. And so we're basing a lot of it is on here. And so I'm actually going to take this off for right now, because I don't think it fits anymore. So I'm going to leave that 4 firmly in place there at the August 1st low. And then we are working on that minute wave 5 now. And so is there a chance that we'll come in tomorrow in the market again and do another plowdown? I think it's there. I'm not going to be looking for it right now. And so, because if I bring it back down out of my daily, bring it back to that hourly, I just think it was very powerful. And to have it come up, it hasn't crossed over what would be labeled wave 1. So, and if this is wave 1 and this is wave 2 and this is wave 3 and this is a 4, and it is right now an ABC up, cannot surpass that. 4 cannot cross 1. If it does, and that's to tell you, all it needs to do is get above 64.55, 56. And if it can, well, then this is wave C. But until, if it goes from here and we start to just slam it lower, then there is that possibility that it's 1, 2, 3, 4, and we got a 5 coming off. Then we're still back into where we could end up down. Let me pull these back into gear. We end up down just below that level. And I think we had it at still about 63.15. to be honest with you, or I think it could come in. So, and still be just the B wave, that B wave, this B wave. So right now, I'm very happy that it didn't come down and cross over the start of the A wave. So I'm hoping that that holds, and that would suggest that we just continue to go up from here. Now, tomorrow, let me just kind of see what we got, if anything, coming in tomorrow on economic data. We have job openings, factory orders, Fed beige book, and auto sales, and two Fed people out speaking. Job openings at 10 a.m. Uh, Also, factory orders at 10 a.m. Beige book at 2 p.m. So Thursday is kind of an interesting day because we have the ADP employment, we have initial jobless claims, we have U.S. productivity, U.S. trade deficit, S&P final services PMI, ISM services PMI, and then three Fed people out speaking on Thursday. Friday, more importantly. So that ADP employment is just a precursor to the employment report we get on Friday. So again, very important right now, this employment report as it comes out, if it's continuing to show, uh, things aren't looking as rosy as the people want to believe, so then it could just really flatten everything. It could just knock it all back down because if it starts to take away that thought that we are going to get this rate cut, if there's any hints about that, maybe that won't come, I think the market will just kind of fall apart. And that then will change a lot of things within this, depending on where we are by the time we get up there. So, for example, if we kind of get up here and we're putting that C wave in and I could put a 3 above it, and then we run down, well, then it's just a fourth wave and it's going to come in 3. And it can overlap definitively. It's going to overlap wave 1. Be looking for it. But I'm looking for this to get up and I can start to triangulate, so to speak, uh, the triangle pattern. All right, that is going to be it. Spot gamma levels will be reviewed again tomorrow. So we'll take a look at those gamma levels tomorrow morning. Early on this morning, we just went through large gamma 1 volatility trigger. We went through large gamma 2, and we actually got down. Let me just go over to the SPX. We got through large gamma 3. We got through the put wall and took it all back. Got it all back and closed well above. So we are heading back towards, it depends on where it's going to come in. I don't know if large gamma 4 got totally taken out or actually the volatility trigger, which was at 64.62. We'll see. So right there where the hourly 200 is sitting is it could be still the volatility trigger and not that far. So we start getting there. All of this is like, why did that happen? And we just kind of go, we just take it back in the other direction. So as we break things on the way up, it gives that extra boost to the rally. All right, that's it. Our next update will be the morning update.